We're still talking about commodities. Of course, you know, on Tuesdays and Thursdays on the program, we'll focus on the commodities market with contributions from the research unit, economic research unit of Financial Derivatives Company. Let's talk to Okwemi Oguntade, who is a research analyst with the FDC, as we focus on that segment of the market. Good morning, and thank you so much for coming in.
Good morning.
It's great to have you on the program again. Now, looking at how oil prices have been like, there's been a bigger than expected build in U.S. crude stocks, and this have added concerns to a global oil glut. And so as of this morning, when you sent in the data, we saw oil prices, a weekly change of 1.23% at $48.11 per barrel. So it's almost like, don't heave a sigh of relief just yet. The market isn't clearly out of the woods.
The market isn't, not at all. I mean, the American Petroleum Institute released a report earlier this week showing that, you know, they expect crude stockpiles to increase to 7.9 million, and this is significantly above the initial expectations of about 3 million. So this is making you think, okay, this supply glut isn't going anywhere, because if you have somewhere like the US, where we've had the consistent decline in rig counts for about 7 consecutive weeks, and then the report this week is that the crude stockpiles are increasing. This is just going to show you that the supply glut hasn't gone anywhere. And then if you look at OPEC as well, they're supposed to have a meeting this week with non-OPEC countries, and out of the 8 non-OPEC countries they invited, only 5 turned up. And the minutes of that meeting is not out yet, but a couple of journalists spoke to like oil ministers, the Russian oil minister, and it was like, look, we didn't discuss anything about reducing supply of crude.
So maybe that's
all
the
we
reason
spoke
why
about
you
is underinvestment.
You have the full house, you know, coming in for that meeting, because they didn't expect to see any
that
change.
Nothing was going to happen. So what's the point of, you know, wasting resources to travel down to Vienna to have the meeting when you know nothing is going to happen? So, yeah, it's just, the supply glut is still very much present, and it doesn't look like it's going anywhere anytime soon.
And then we're also seeing that the dollar has weakened, and so a weaker dollar should make dollar-denominated commodities, including oil, a little cheaper, but it's not.
Well, it should, but the thing is, what we're saying here is that, okay, we have a weaker dollar, right? That should make oil cheaper.
Yep.
But what we have is that there's a general slowdown in economies. So at this point, you shouldn't expect to see an increase in demand just because you have a weaker dollar, because most economies are battling all sorts of economic challenges. So at this point, we shouldn't expect to see an increase in demand because of the dollar has weakened.
So let's talk about the agri-commodities now. The agri prices, cocoa futures have hit a 3-week high, and Ivory Coast too is one of the major exporters of that particular commodity. Is expected to have its elections coming up October 21st.
Yeah, on Sunday.
On Sunday.
Yeah, so October 25th. That's when the elections.
Actually.
Yeah, that's when the elections are coming up, and most investors are, you know, they're anticipating that maybe there might probably be violence, but at the end of the day, the current president, we expect him to emerge as the winner with no challenges whatsoever, because the Ivory Coast economy has been doing so well so far, and there's been a projection of about 7.9% growth for 2015. There's been, you know, good policies. I mean, in 2010 there was a bit of violence with about 3,000 people dying because of the opponent party, but this year we shouldn't expect too much of a hustle during the elections, because the incumbent party is actually working hard, and he has performed. He has proven himself to be a performer. So in essence, I think the hike we're seeing in cocoa futures is just temporary. After the elections, I'm guessing things should go back to normal. By the end of the day, it's to be driven by demand and supply. And what we've seen in the cocoa market is that there's still a shortfall in supply, and demand hasn't, you know, going back to where it was before because of the general slowdown on the global front.
But why are we having palm oil futures trading higher, for instance? And let's not forget that Nigeria produces about 990 tons, 90,000 tons of palm oil annually. But for the year-to-date change, we're seeing it at 14.73% negative, but weekly change is 1.98%.
Yeah, for palm oil futures, if you look at the Malaysian and Indonesian exporters, basically what's happened this week is that there's been a restriction in supply because of the adverse weather conditions from the El Nino weather pattern. So this has affected exports, so to speak, and this is pushing up price because most investors are expecting that there might probably be a shortfall in the supply of palm oil. So that's what contributed to the increase we're seeing. But year to date, it's still in the negative because demand has gone down significantly.
So on the domestic front, remember we started tracking domestic commodity prices. On the domestic front, what has continued to drive prices? Because we see that the price of 50 kilogram of maize, for instance, is 2,500 here in Lagos, and Onitsha is 2,700.
Well, for the domestic commodities, what we're saying is, for now, what is driving domestic commodities is the general economic environment as well as the forces of demand and supply. But if you look at the recent, what we've seen happening in the foreign exchange market, most of our domestic commodities, such as rice, palm oil, flour, most of this have import content. So most of the firms in the food industry tend to import these raw materials for production. So if we're having a restriction in access to foreign exchange, we're looking at a possibility of further inflationary pressures with these commodities, and even looking forward ahead into the festive seasons, there's going to be a demand pull inflation. In addition to that, we have a cost push inflation as well because of the foreign exchange restrictions. So it's almost like looking like this year, December, we're going to have like an hyperinflation or something. I mean, the IMF earlier this year projected that it expects inflation in Nigeria to be 11.5% from 8% the previous year. So for looking down the line for the end of the year, it's looking like the inflationary pressures for domestic commodities is going to go through the roof.
Well, just before we get to that, I'm sure we're going to have next week, of course, to track those prices as well.
Yes.
And I'm keeping my fingers crossed. I hope my fingers don't stay this way until the end of the year. But thank you so much, Okweyemi, for coming on the program
Thank you
this
very
morning.
much.
Okweyemi Oguntade is a research analyst with the Economic Unit and the Financial Derivatives Company, who give us the regular commodity prices for oil and agri-commodities. But that's it on today's edition of the program. Many thanks for spending time with us. I'm Harriet Agbenyi. Have a profitable day.